do you want to go ahead and introduce yourself and maybe briefly just maybe, your background, where you're located, and what have you done on the passive investing side of things?
Yeah, absolutely. Well, first off, thanks for having me. Wow, I'm so honored to be here. What a great group of people you guys have put together. I see some familiar names and a ton of new faces. I am excited to be every one of you. But a little bit more about me. So again, my name is Jenny Gu. I actually spent 13 years in corporate America working for a company called Procter & Gamble, selling soap for about 13 years. And then during that time, started investing in single families like many of you, I'm sure. Learned the magic formula for real estate, and then decided to quit my job last year in February of 2020, right before COVID, shut everything down, and then just dive headfirst into multifamily. And then 12 months later, accumulated over 950 units, both passively and on the GP side. But really what I'm passionate about is just sharing what I know, my story, just because I wish somebody taught me about investing 10, 15 years ago. So I'm happy to be here. Love and appreciate all the questions you guys have. And hopefully, get to share the knowledge that I have as well. So a little bit more about what I invest in. Passively, I invest in currently Texas and Georgia, and hopefully a few more this coming year. And then from a GP, KP standpoint, I focus on the Arizona market today.
All right. Good overview. Thank you very much, Jenny. And Mark, I see you on as well. Same question to you. Do you mind just giving a little bit of background and where you're located, and what have you been kind of doing so far on the passive investing side of things?
Yeah, I'm here, and I should have went after. Should not have went after Jenny. Should have went before her, so I didn't.
You made it hard.
I'm a little bit nervous now. Yeah, I'm a real estate broker. I've been for 20 or so years, and for my first investment, I was an LP in Florida with another company, and I've since invested in 3 more. And as Ferris knows, I've been out to the Atlanta market. I think we looked at 1 or 2 days. We looked at like 5 properties. So they kind of joke with me, calling me active passive or passive active or passive aggressive. I'm not sure, but I get out. I like to see the properties and learn more. I don't want to just sit and just get a check. I'd rather have some activity in it so that I can touch it, feel it, taste the property a little bit, make sure I've done all my due diligence that I can do, and then get to know Ferris a little bit and Ben more so, and try to find out for sure if these are people that I want to be in business with on a long-term basis, because really, ultimately, that's it. It's not a one-time thing, and it's a long-term process. So, I met them through another friend, Ronnie. I don't see Ronnie on here at the moment. He may be, but I met Ferris and Ben through Ronnie with Kingley, and him through my son Travis. So kind of got to know everyone in that way. And I'm an LP now on 4 total transactions. I'm getting ready to hopefully soon be a GP or a KP on something here in the very near future.
All right. So Mark would like to say is an active passive investor. So really kind of some people can make this a very, very passive business. Some people like to make it a little bit more active. So, he gets out there, gets his hands dirty, gets to understand what he's getting into. So that's good. So maybe let's kind of back up a little bit, right? I like to really kick it off with, how did you guys first get exposed to just the world of multifamily passive investing, right? As the first question. And then my second question is, what was your goal whenever you kind of got exposed to it, right? Were you looking to just deploy capital? Were you looking for something else? And so I'll do the reverse this time. So Mark, so Jenny doesn't steal your thunder. You want to go first?
All right. Sounds good to me. So originally, my son had told me I need to be listening to podcasts more in general. And then in particular, start listening to this guy, Grant Cardone. And I should listen to him. He's investing, doing all these things. And I let it sit for probably 6 months, 8 months before I jumped in and started listening to him first. And really didn't know anything about the whole syndication side other than what I was learning from Grant. And I don't remember what happened, how I got this particular connection. Then the next connection for me was getting into a Rod Cleef event, one of his masterminds, and then also one of his 3-day events that he has. So what's he called? Lifetime Cash Flow. So I got in to one of his 3-day events. And that was really my first full exposure to understanding how all the intricacies and stuff of the syndication world, and really understanding that this is not something that's all that complicated. I feel like I could have done that many years ago. And ultimately through that 3-day process, and I've been to several of those. I've been to several MFINs, the one that Ferris has, and learning that process and going down that path, making sure that if I go ahead or when I go ahead and GP on something, I have a pretty good background before I do so.
Yeah. And so were you intending to get into the space, right? I know your son was kind of telling you to get educated. Was that because you were looking to deploy capital, or
They knew,
was that just
knew
kind
I
of a
was,
side benefit?
Yeah, I was selling stuff. I was selling off a bunch of single family that I owned and some multifamily. And he knows that I'm invested and enjoy the multifamily space, investing and owning in multifamily. But I just didn't know. I used to think, and I've been a realtor for many, many years. I used to really think that all the money used to be mine, or I would get with a partner or two and we would have to pull it down together, like in a JV type of a scenario. I really didn't understand the whole fundraising, equity raising thing. So deploying capital was first with Grant. And then once I started learning the process, then it was all about learning the process and becoming more actively involved in it.
All righty. Thank you very much, Mark. And we'll come back and continue on your story here in a minute. So Jenny, same question. And feel free now, now that you have it on after, you kind of go, go on and on.
Can't go after the master mark, right? So I think, again, like a lot of folks out there, we wanted to find financial freedom. Okay, my husband and I. And so we started passively investing in single family, but it really clicked when we learned about multifamily. And like many others, I'm sure you've heard of the little purple book called Rich Dad, Poor Dad. It's the real estate and I would even say entrepreneurial Bible. Read that and then met the right people. So it's all about, like Ferris mentioned earlier, meeting the right people, finding a mentor, connecting with folks. And so when we lived in Cincinnati, we just found the right people through these meetings. My husband attended one of Joe Fairless's meetups in Cincinnati, met a few folks there, listened to so many podcasts, read a bunch of books, and just, again, met the right people. So I think that's super important. So if you're wanting to start somewhere, you guys are all here. Obviously, you're doing the right first step to meet people and make those connections. And then just once you start learning more, just take action. And for us, it was defining what that magic number was. So what did we want for financial freedom? And that was a set amount of passive income coming in every month. And so once I reached that point, I quit my job actually. And it's been great ever since. And in fact, I just drove back. I told Garrison and Ferris, I'm like, guys, I'm driving back from San Diego today. I literally just landed back here in Orange County about an hour ago. And I was able to do that because I passively invest. And so I hope that sparks a little bit of urgency for all of you to go out and learn more and do the same.
Awesome. And so to recap, right? I mean, you invested in multiple deals, you kept passive investing until you kind of hit your number, right? To where you were comfortable with you just basically, hey, I'm going to go full-time in this business, right? And either continue to do passive or start to get, sounds like, more on the active side. Is that right?
You got it. And I think it's okay to do both, right? Like many of you guys also do both. And my primary strategy is I invest obviously as a GP to, that's my full-time job now and I enjoy it. I love it, but I still do the passive side as well because I want to continue to learn from other people, from other markets, so that I become the best operator possible. And so that's why I still choose to do both.
All right. Awesome. And so I guess on that same note, I mean, maybe the answer for yours is a little bit easier, but I was going to ask, how's it been, right? Has it been what you expected? I mean, has it been fruitful, right? Are you glad you hopped in on the passive side before you went into the active side? That's probably I think that's the question that most people tend to want to know, right? Once people get in there, hey, is it worth it or not, right?
Yeah. And that's a great question that a lot of my friends and family ask me. They're starting to see what I'm doing. They're like, Jenny, you're onto something. Like, should I, just go past the route first, or should I just jump head straight into being a general partner? I saw a question. GP stands your general partner? And my answer to them is, look, if you still have a full-time job, it is okay to say, you know what, I'm just going to invest passively in a first deal, learn what they're doing, so that I can quickly get up to speed. You can quickly get up to speed, and then decide, okay, is this something I want to keep doing, or do I want to, burn bridges and jump over to the GP side right away? So it's always a good idea to passively invest, one, to learn what other sponsors are doing, but then get a sense for how it actually works, soup to nuts.
Yeah. And so but your answer is it's gone fantastic and super glad I kind of pulled the trigger.
Oh, sorry. Wasn't that clear? No, it wasn't clear. It's going awesome. It's, and you guys are all here, that real estate is a good investment. It's stable. It's something you can touch, feel, and see for yourselves. So far, all the passive ones are doing fairly well. And despite COVID, right, happening all last year, they're all cash flowing. Occupancy is fabulous. And so it has proven out to be a very successful model.
All righty. Awesome. So Mark, kind of same question to you, right? Really, the question just ultimately, how's it been going, right? Is it what you expected? More work than you expected? Less work than you expected? And, are you kind of happy you got into it?
Yeah, the passive side's pretty simple. Either checks come in or they don't. So you don't really have to worry about it a lot, whether it's quarterly or monthly, that kind of thing. I got my first, this year, I got my first deduction. The ability to have a tax write-off because I'm passively invested in a project. So that was nice. I had a good year, and the tax deduction I got last week actually was sizable, and very happy about that. So generally speaking, I want to not work every day for sure, but if I do want to work, or if I do work every day or any time period, working at and doing multifamily, I'm good with that. I enjoy that. I'm selling real estate and stuff. I'm kind of at a position now where I'm about done working on that. I just would rather do passive and invest a lot and vacation a lot. So passively will let me do that.
Awesome.
Very happy about that.
Yeah. Well, yeah. Being a passive investor, vacationing is definitely the life, right? So I tell people, like, being active in this business is also a ton of work, right? Like it's just there's a lot that goes into it. And so the real perfect world is where you can just go passive in a bunch of different deals and just kind of sit back and let someone else do the hard work. So question, I guess, Mark, so on that same vein, right? What do you look for, right, whenever you're kind of vetting both a deal and an operator? And Jenny, this could be the same question to you. So let's see if we can come up with something that Mark doesn't think of.
That'll be easy. So what do I look for? Why did I invest with Kingly and on let's say our two deals that we have in Atlanta? Was basically, I'm pretty trusting, and I'm real estate oriented, and as a rule. So it's not hard for me to trust in the actual concept of investing into an apartment building and getting some money from it. So that part of it doesn't seem risky at all to me. So the next part of it is, do I know, like, and trust the people I'm going to work with? In Grant's case, I don't know Grant. My son does, and knows his family and the whole bit, but I don't. But that was my first jump because he's got a pretty strong national name. And then the next one was getting to know someone more on a local level, so I could really get involved and knee deep in it, and getting to know Ferris and Ben and Ronnie, and getting to know you guys, making sure that, if you guys say something, that what you're saying to me is real. It's purposeful, and it's trustworthy. And if I ask a question, you're willing to answer the phone and ask and answer the question. No questions too small or too big, really. And there's definitely a high level of trust, and part of that is going to be your experience level. It's, investing. I'm probably going to invest on someone else's first deal this coming week. I'm going to say next week on a smaller project from a guy I met at one of the events, at your event actually, at MFIN in Houston. I'm probably going to invest with him this coming week and be a number 5 passively. And he'll be someone I would be glad to partner with ultimately, and you guys as well. Someone that I could meet, trust, like, and know that I'm willing to give them my money, and that they're willing to do whatever it takes, I guess, to earn that trust and become a friend ultimately. And that's what I'm looking for. So that's what we were able to find in working with you guys.
Got it. And so Mark, let me ask you this. Is it for you vet the operator more than you vet any specific deal?
I would say probably 80% true on that. You know, if I can't trust the operator, someone I don't know, someone I've never met, someone for whatever reason, I don't know if you want to use the word vibe right with or something like that. I don't mesh well with, they're not going to get my money no matter how big the deal is. Because if I can't sleep at night after I wrote a 6-figure check, there's no deal worth that.
Got it. And then maybe so it sounds like for vetting the operator, it's more about social soft skills, right? You know, how did you mesh with them? Did you talk to them? Did they feel good? Did they communicate well, et cetera, right? What about the deal? I mean, what do you do for vetting the deal itself? And do you dig in much on the deal, or is it more, hey, you're betting on the operator and, you know, by trusting the operator, you trust that they've vetted the deal, they've done the numbers, et cetera?
Yeah, mostly what you started off with. I trust the operator, you know, and I'm looking at the deal, and I've seen several now, many of them now, and they all very frequently look very similar on paper. So, you know, am I going to get the preferred return that I was promised? Like in my first investment, the preferred return was at 6, because he's got the national audience. I think ultimately he's able to do that. But partly I wanted to get more into more of I like the C-class model. You know, we're getting into properties that need some work, and we need to go in and, you know, rehab some stuff and increase rents. I enjoy that, and I like that model. So I'm going to be more likely to go that way anyway. And that's what you guys do. So that works out well. And then the deal itself, how much am I going to make on the preferred return? And then ultimately, when you sell it, what will I expect to make? Those for sure come into play, because, you know, if you said 3%, then I'm not going to have a conversation with you, no matter how much I like you. So,
Don't worry, Mark, I got a good deal. It's 4%. All right. That's 30% better than what you're expecting. All right. So
exactly. So I'm going to be careful there. I want to have a certain amount of income, but I also want to be able to sleep at night knowing that you guys aren't in the background there, where that's really used on a martini there or something, a nice tropical drink, and with my money and no property.
Looks like that's where Ferris is right now.
That's what I'm saying.
all right.
That's
We do
usually the
operations
background.
from a beach as well. So
That's the background I normally use. So I had to go something different today. So
perfect. Well, thank you, Mark. So Jenny, same questions.
Yeah, I 100% agree with what Mark says. So, you know, the numbers are the numbers, and they are very, very consistent really across any sponsorship team you look at today, right? They're very, you know, cash flow, 7 to 9, 10%, 8 to 10%, total returns, you know, 1.7 to 2. That's a very normal range. So what you're really investing in is the team and the location that you believe in. And so I'll just separate that for a second. So on the deal, you obviously should do your diligence yourself on top of what the team is telling you. What does the market look like? What is the population growth? What is the job growth? What is the crime rate? So all of that is a given. Anytime you choose to give somebody else your money, that is an expectation that you should be doing your own diligence. And so there's a whole list of things that you should be looking for, which I won't go into a ton of that right now. So that's that part. And then from a team vetting standpoint, obviously a track record, right? As Mark's mentioned, someone you know, like, and trust. I also, though, don't have a problem investing with people should it be their first deal either, if they don't have a track record, if they're newer, because they are typically more hungry. They will have something to prove. They will actually, triple down on vetting the property because they have their reputation and their brand on the line. But on the investor side, now that I've been in a few, handful of passive deals, I can instantly tell who is someone I want to invest in based on your conversations with them. This is, people forget, this is a people first business. And so how you interact with them, how they treat their investors, how they treat their property management team is very telling on what they will do with the property and how successful they will be. So I guess an example I can share is, when you choose to invest with somebody, you typically have that first phone call, right? With that sponsor or that team to hey, what's your name? And, you share their goals. If the call is only 15 minutes, that kind of kills it for me, because I'm like, well, you're supposed to get to know your investors. How much are you going to learn about them in 15 minutes? And to me, that just means, as an investor, I'm just a number. I am just, they're just checking the box to make sure they said, yep, I connected with Jenny and now I can put her in my database and in my email list. No, I want to know about your family. Where are you living? What are your goals? What did you do last weekend? What did you do for fun? And then get into like, okay, what are your investment goals? So that we make sure we're a right fit with each other. So if someone's taking the time with me to get to know me, then that says a lot. And then do I have access to them? So I want to be able to just either text or pick up the phone and call or email, and they should be able to respond back to me pretty quickly, with a response, because, you're dropping 50, 75, 100 grand. That's not small change. So you should be able to have your questions answered relatively quickly.
All right, so it sounds like you're vetting the macroeconomics, and again, going back to that social aspect, right? Getting to know that operator, are they available, et cetera. What about the specifics of the deal? Are you actually underwriting the deal, pulling up the T12, asking for it, digging in, and
Yes.
or are you just asking them for their underwriting and just validating that? Or again, is it just purely the operator?
Both. So I'm a geek. So I like to just do the analysis myself. So, they'll show you their numbers on their webinar, which is great, but it does not hurt to ask them for the rent roll and the T12 for you to do your own underwriting, because you might want to try a different, route of being conservative or more aggressive. It's up to you. Just trust, but verify is what I typically go by, because again, it's your hard-earned money, right? You want to make sure.
No, like I like to tell people, most people don't wire 50, 75, 100, $200,000 of money to anything else besides a house that they're buying, right? And so there is absolutely that comfort, and people just realizing that that's a significant chunk of money to most people, right? And so that's where that comfort and that trust factor comes in. So another thing, I know people are talking about this in the chat that neither of you really mentioned, which is, do you guys dig into their track record very much, or is that only for in the case where it's a non-newer operator that you do dig in and ask and kind of, what do you look for there as well? And either of you guys can answer that one, or both of you. So
yeah, Mark, you want to go?
I can give a really short, quick one, I think, on that. I do check. I've taken some other classes and some other things as well, and I kind of follow, make sure that the cities are growing, that there's not a population decrease. Make sure the population is increasing properly, 15 to 25% window, and then that their income is going up like it should be 30% or so since the last census and that kind of thing. Make sure that property values are increasing. Then I check to make sure what the rental income is versus what it costs to buy a home in that area. I do check all of that as well, especially in the one that I'm looking at now that's in New Mexico. Looking more into that to make sure that the city's, in fact, growing. And there's been a few deals that look amazing, and then I see that in the last 15 years the population has decreased by 3% or something. I can't be comfortable with that unless if it was in my own backyard, I might be. If I live there, maybe I could be okay with that. But investing passively with a new operator in a town that's losing population, that's probably one of the first things I'm gonna shy away from that. Not the operator necessarily; they may think it's a good deal for whatever reason, but that particular deal that could prevent me from jumping into that deal because of the population decline. Some areas have declined in population for the last 25 years straight, so you really don't want to get mixed up with something like that.
Right. Jenny, anything else to add to that?
Yeah, I think one of the easiest things you can do to vet an operator or a team is just ask for references. So, hey, if it's someone new that you've never invested with before, just say, can I have 2 to 3 names of your current investors, so I can call and just get their opinion. And if they say no, that's a red flag, right? If they're not willing to share any names of people that could say good things about them. And if they do, call them and just ask them, hey, how do they operate? Again, for me, I ask things like, well, how often do you communicate? Is it a monthly or quarterly newsletter? I would expect a monthly newsletter because there's so much that can change in a quarter. Do they share financials monthly or quarterly? How is their platform set up? And so just those different operational styles could also make or break. Because I don't want to I'm busy too. I don't want to have to chase down my sponsor to, find reports or, not have that information easily for me.
Yeah. And it's funny you mentioned the referral thing, because I think I did that up front. Not enough investors ask for that, right? I'm being on the operator side. We've done many, many deals, and honestly, I don't get that question in as much as I would expect, or as much as I would even want, right? Like I would expect it more. And, and I think it's a great way for people just to get to know us, go talk to someone that's gone full cycle, right?
Yep.
And so, yeah, I'm surprised not enough passive investors ask that question. So if you guys are looking to passive invest, I think it's a good question. I think it's important, right? Go talk to it, another investor candidly, right? Outside of the operator's purview, just to kind of dig in and see, and ask that person that what's the good and the bad, right? Because no operator is perfect, right? There are absolutely things that a passive investor wishes they did differently, right? And so, I think that's a good one. And then I think reading over some of the chats, Madeline, hope you're doing well. She said it right. Taking out a property every month is not someone I want to invest with, right? Especially, because again, it's easy to buy deals. It's hard to operate and perform deals, right? And in this business, it's about, under promising, over deliver, right? Set the right expectation with the passive investors and hit that, right? It's better to say, look, I'm going to give you a average of, 8 instead of 8.5 and actually hit the 8 versus tell you the 8.5 and still give you the 8, right? Well, now you misset the expectation and people are disappointed. And then reading over a few of these, another comment that I saw that I actually 100% agree with, which is it's ultimately that a bad operator can make a good deal bad. A good operator can, maybe make a deal just okay, right? And so, operations are key. And I'm a big believer that I think the next decade it's the decade of the operator, right? I think operations are critical. And, for us, we're focusing a lot of energy just on, building out that back office, doubling down the operations. Because again, I think a lot of people have been able to ride the wave, right? With rent, with rent growth and appreciation, it's just, you haven't had to be a tight operator. Whereas I think that's going to change just as margins are getting tighter, as deals are getting tighter. So,
yeah. And just to add to Ferris, so not only don't just vet the team, but also who's their property manager, right? Mm-hmm. And so you can just Google anything on right now and find an answer, find reviews, go online, check them out. How many properties do they manage, and get a feel for how they operate too, because you guys know property managers will make or break your deal as well. And so you can have a great operator too, but a crappy property manager, and that can just delay your returns as well. So I think it goes both ways there too.
Yeah, I would say the property manager is more important than the operator in a lot of ways, right? Ultimately, the property management company is the company that can kill a deal easily, right? And, ask me, I know that from experience, right? We started our own management company because we saw just how poor most property management companies are out there. And, there's no care in the world around operating deals tightly and effectively. So, yeah, the problem, but I would say I'll disagree with you, Jenny. I don't think you can Google that information. It's really hard to Google, figure out what management companies are good and bad, right? Because ultimately, what are you going to find, right? Is it going to be tenant reviews where the tenant are disappointed? Because most of the time, only disappointed tenants leave reviews. And it's really, to get that information, you got to talk to other operators and figure out who has, really use that management company. Just like you vet a operator.
Yeah.
Go ahead and vet the management company. Tell me, give me 3 of your referrals. I want to talk to them, right?
Exactly. Yeah. I just thought of something. I've never done this before, but maybe you could. Could you, secret shop an apartment that property manager currently owns and see how they interact?
No, absolutely. And I've done that, right? And again, but then it tells you, the problem is it's so dependent on the on-site person and the supervisor.
Agree. Yeah.
And that's where I think most managed companies fail. That there's not really a good continuity of corporate to that level. So. Mm-hmm. Let's see, I'm looking through a few more of these questions. Look for jobs. Austin is a good choice because if they still.
Hey, let me ask, hey, Jenny and Mark, let me ask you two a question. Have either of you experienced any type of bad situation, any type of bad investment, what's your biggest headache or nightmare that you've experienced so far investing passively, if any?
Yeah, the ones that I don't love are the ones to the point that the operating team does not do a good job. So I know we're not perfect, but you have to know how to handle a problem. And so yes, if something goes wrong, okay, it's hopefully it's not your fault. If it is, and even if it wasn't, what is the plan to fix it? And then are you forthcoming? So I would rather, you tell me in a report and, something broke, or, we had 10 tenants that just up and left in the middle of the night. Okay, great. Now what is the plan to fix it? And what is the timeline? It's a sucky situation, but as long as you tell me you have a plan in place, that's okay, versus not informing. I think the communication is probably the one thing I've seen some teams struggle with that I wish they would improve on. On the pro side where things are bad, but they show that they have a plan in place. So for example, the Texas freeze happened. And so some of the properties I invested in, there were a lot of damage that happened because of the storm. Well, my expectation as a passive investor would be, okay, well, quickly assess, we'll check to make sure your tenants are okay, then quickly assess the damage and let us know what that looks like. Versus one of them, took maybe 2 months before they even actually came out to us. I had to say, hey, how is the property doing? You have to be proactive, and a communication on things like that are super critical. So that could, would that deter me from investing with them again? Not yet, but it could build onto more if that continues, right?
Good
Yeah,
answer.
absolutely. And I think communication is key, right? As an operator, there are some things there are some mistakes that you may have made, and there's some mistakes that are out of your control. Again, it's about communicating it, setting that expectation, and showing that you have a plan to resolve it, right? So ultimately, I'm not disappointed as a passive investor if that person identified the issue, put a plan in place, and nipped it, right? And now things are going forward, versus kind of letting it really, you don't want to let things fester, right? And so I think festering is the root of all evil. So be intelligent and kind of aware of that. And I think, Mark, were you going to add something just now?
I was just going to say that, obviously with COVID hitting and not getting distributions as expected is painful, especially if I'm guessing that most people that are giving the kind of money that is required, they're not really living off of that. But also, when you're expecting to get $400, $500, $600 or $1,000 a month from a particular property, if it's not coming in as expected, why not? And again, a good explanation. And you understand, there's things that happen with COVID and whatnot. Can't get rid of bad tenants and different things. And there's a certain safety amount. You got to make sure you have income in case it really gets bad. But at some point, not getting that regular check, that can become a problem. So I know from talking to others and hearing other conversation about that, that's a significant concern. I think in the end, we'll be fine. All the properties will be good, but not getting that check on a regular basis as originally agreed is not a good day.
Yeah. And just one more add. So here's another really good example that I was really happy about. So COVID started last year. And what did this team do? Instead of monthly, they started sending weekly reports. And I'm like, at first I was like, wow, this is kind of overkill. But then it was great, because what is the first question people ask when COVID started? Well, are people going to keep paying rent? Right. And so then they literally just started sending weekly communication, just a quick update on, hey guys, collections were X% this week. It was better than last year's same week number by 10%. So we're okay. We'll continue to track and keep you posted. And then it tapered off, obviously, a couple months later, because things were still, were actually better than expected. So just the initiative to do things above and beyond means a lot.
Yeah. And I think it's easy as an operator to say, look, I only committed to this, I'm only doing that. But you're right. I think, again, things happen, and just showing, people that they're, trying to communicate, right? For us, and I'll be the first to admit, I mean, we do mid-month updates still, and they're a pain. I'm not going to lie, right? As an operator, it's a lot of work, right? To do, these updates for every deal and kind of work through it. But I think it's important, and investors appreciate that. So if you're an operator, again, communication with your investors, I think, is key. So I want to shift gears a little bit before we wrap up, because I know we're not too far from time, but we're talking about multifamily, right? Have either of you guys invested in anything else outside of that, right? For the passive investing side?
Passively, no. Getting ready to. I'm going to be this week, actually.
What are you investing into this week, Mark?
It's a hotel that's going to be built in Playa del Carmen. It's going to be a Marriott there on the beach, and through some series of connections, I've met with the people that are doing that project. They're going to be building it, starting construction inside the next, I'm going to say 90 days, maybe 60 days. Once their financing is in place, they'll drop tractors and start grading and doing what needs to be done. I found out about it at a good time because they've been working on it for 2 years already, trying to get all the approvals and the entitlements and stuff from Mexico and from the different entities that they have to get there. And that's all in place. And so now it's time for them to get going. So I'm going to give that a shot. It's going to be an interesting. In fact, Ferris, I want to talk with you about it at another time with more detail, because there's some things there that they've implemented that I think could cross over into the multifamily.
Yeah, always happy for new ideas. So
Wonder what that construction cost looks, the difference between day one and day now looks like with the increased expenses due to COVID.
Originally, it was helping because the peso versus dollar thing was really helping them, actually, because the dollar when they started the project was not as strong against the peso at that time, and so their construction costs. I haven't talked to them in the last 3 weeks about that particular thing, which is a great question. But prior to that, they were actually very happy because of the spread in the currency. So they were actually going to be able to get like a 10% improved construction costs over what they were thinking it was going to be originally.
Very interesting.
So
any other asset classes?
Yeah, right now I am tripling down on multifamily, but I am open to passively investing in other units. So self-storage, mobile home parks. I've even sat on a webinar on ATM machines. So I think, I 110% believe in real estate. I don't know enough yet, which is why I'm open to learning more about some of these other asset classes, because I don't want to be left behind. I think you should always be learning more and more and more to see what else is out there.
Let's buy a laundromat. I always wanted to buy a laundromat. Cash business.
Sure.
Cash. Me too for the mobile home parks. I've listened to all of many, probably 80 or 90 mobile home park podcasts and self-storage as well. I almost bought, I had an opportunity to buy a mobile home park or a self-storage recently, relatively small. I think it was 71 units. It was cash, but it was in an area I couldn't get enough feedback on, and it sold the same day that I found out about it. So I couldn't jump into that, but I would have been a general partner on that one. But I'm certainly open to investing in those two things as a passive.
Fantastic.
Hey, so then maybe, the drum roll question, right, is anything else out there that we haven't discussed that you think is important for passive investors to know, whether they're new or experienced?
Go ahead, Jenny.
No, I mean, we hit on the big one. So do your homework, right? On the team and the deal. I think, and I mentioned a little bit this early, but it really is taking action. So as you can spend the next month, year, 2 years humming and hawing and then collecting all these resources and knowledge that you're doing right now, but that means absolutely nothing until you actually take action. So that's something I really encourage everybody to do, is just continue to learn and find sponsors and deals. But if you don't do anything, it's going to be a waste of your time. So just do one deal, learn from it, pivot if you need to, and then just keep going, right? And then you'll just say the same thing I always say. Gosh, I wish somebody told me to get my butt moving 10 years ago.
And take action. I mean, I go to events and sometimes you go for a year and 2 years and you see the same person there still kind of wanting to continue to learn, but at some point you just have to bite the bullet. So I will absolutely resonate with you.
Yeah. Set a goal, put your goals out there.
I'll learn all I can up until August, and August I'm going to act on any opportunity that makes sense,
Exactly.
right? Something like that. So Mark, anything else?
No, similar, just that I would say if you're nervous about something in particular, a particular either, idea or concept of investing passively like that, attend some of the events, go and meet the people in person. There's plenty of events right now. You can go to, like I said, Rod's event or one of Ferris's events, or, meet Kenny Wolf or something. I mean, go to something and you can find out a lot about the people that are sponsors at those events from the other people. So you can kind of get that whole, experience level. And hey, what do you think? Are you invested with these guys? And you find that, I'll talk to 10 or 15 different people at one of those events, and 7 of them are already invested in projects. Some of them are my partners, it turns out. They've invested in the same projects that I've invested in. So it turns out, then we right away have a focused purpose. We already know we're in one deal together. Why not partner maybe on another deal ourselves, or jump into, or they'll tell me about another project they're investing in. So you really get to know the people very well doing it that way.
I agree. And that's part of why we put them on, right? So, it's funny because, I had another operator say, why would you do these events if you basically invite all your passive investors to these events so I can get to meet them, right? If there's another operator. And I'm like, hey, they don't invest with me just because, right? The track record or whatever is something that you can't, kind of repurpose or take. So awesome, guys. Well, definitely appreciate you both taking the time out of the day for this. You guys mind leaving, or maybe go ahead and just make it for the recording. How can someone get a hold of you if they want to get a hold of you?
I can throw my information here in the chat if it's recorded. I don't know, but I can do that. But mark@markchappell.com is my email.
Great.
Nice
And I just plugged mine down there as well. So Jenny@verticalstreetventures.com. You can also visit my website, verticalstreetventures.com, to learn more. And happy to connect. I love talking about it if you guys can't talk. So come find me.
And I'll say this, most operators or people that are on the operator side or active passive investors love to talk about real estate. So I'm sure, it's you'll see, for those that are new in this business, you'll continue to see that, right? We are happy to kind of talk about it, answer questions, etc. But guys, thank you both very much. It's definitely a pleasure getting to talk with you all. Hopefully, people enjoyed this, right? It really just kind of a casual conversation around the goods and the good and the bad, but I enjoyed it. Thank you guys very much. With that said, we're going to go ahead and shift over to Breakout Room. So what we're going to do, and hopefully our awesome speakers will stick around for it, right? We'll break the audience up into groups of about 7 people, right? Garrison, you want to go ahead and set it up for 7 people?
Yep. We'll go ahead and knock out the breakout rooms. And just to give you guys a heads up, we'll keep this channel open afterwards, and we let the networking continue long after we're gone. Sometimes this lasts an hour or 2 afterwards.
Yeah, absolutely. So, really, like we like to say, right? Multifamily in real estate is just team sport. Get out there, get to know somebody, go talk about something. If people don't know what to talk about, tell them about what you did this past weekend, right? Nice, easy topic. Just there. That's y'all's little warm-up conversation. And, let's get out there, go talk to somebody, and we'll see you guys back here soon since Garrison's already opened it up. So see you guys.